Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, June 26, 2019, and we are now in the final hour of the market. As many of you know, I believe that the prices, as close as you can get them to the close, are the most valid prices of the day, and therefore those are the prices that I want to make my buying and selling decisions from. So let's just take a look and see if we're connected okay, and if everybody can hear me. I think we look pretty good here. So how's everybody doing today? It's been a bit of an interesting market today. We've been up, we've been down, we've been all over the place. We opened much higher than we are currently now. We had some comments from the Treasury Secretary about the trade deal with China having about 90% of what they need to put it together. Who knows what that means? The 10% could be the sticking point all along. I don't know. But anyway, that did give a boost to especially the techs today as well. So, all right. So listen, here's the plan for today. First of all, we're going to run the U.S. required legal disclaimer. Then when we come back from that, then we're going to go ahead. We're going to look at my current positions. We're going to take a look at when I bought them, why I bought them, and how I'm going to manage the positions going forward. Then we're going to turn to my watch list, and we're going to go down through each stock in my watch list, and we're going to take a look at support and resistance levels. We're going to look at moving averages. We're going to look for V1, V2 entries. We're going to factor in the RSI. We're going to factor in higher lows or lower lows. So basically my process of selecting setups, and if there's something good at the end of the day that meets all my qualifications, then I'll go ahead and enter that position at the end of the day. And if there's any stocks that we have to get out of, I'll get out of those near the close of the market, because as I just said, the closing prices to me are the most important. I feel like they're the most valid in my opinion, and therefore those are the prices that I want to make my decisions from. So, all right. So first of all, let's go ahead and run the U.S. legal disclaimer, and then we'll come back and we'll get down to business. So hang tight for about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, good. Thank you for holding on for that. All right. Hey, Frederick's here. How you doing, my friend? This is Frederick from France. So got your email, and I'm glad to see you'll be setting up those charts. So if you need any help, you just let me know, okay? So all right, well, let's take a look at my current positions, and let's get started. So these are the QQQs. I did enter the QQQs based upon a mechanical trading approach, meaning that I don't have any discretion in the trades. That was my intent when I got into the trade. I said, okay, this is going to be a mechanical system. And what was the system? Well, if you do a back test on holding the QQQs, when the QQQs go from under the 200 and the 250 day, and then they close over, that is my entry signal. It's a good back-tested, quantified, long-term profitable approach to trading the Qs. And so when it closed back above the 250, I actually based this one on the 250-day moving average. That is when I bought. And in addition to that, some other supporting indicators that happen at the same time is we had a nice V2 entry. A V2 comprises 3 bars, day 1, day 2, washes out or goes below day 1. Day 3 closes above day 1's close. So this is a V1, but it also closed back above the 250 day, and then it also closed back over the third ATR channel. And the majority of prices will stay under the third ATR channel, over the negative third ATR channel. So this was positive that was under the third ATR channel, closed back into the third ATR channel. We had the V1, V2 entry, and we closed back above the 250 day. And if you'd like some more information about V1 and V2 entries, I did create a video this weekend. It's in the description of this video. The link is on V1s, V2s. It's about 50 minutes, and I go through all the nuances of about what are V1s, what are V2s, what makes a V1 or V2 a better one compared to another one. So it's a good video. I use them in my trading a lot as an entry trigger. When I see a setup, because because you have a setup doesn't mean you get in. You have to have the big picture setup, and then you have to have some kind of trigger into the trade. So anyway, that is why I bought the Qs back on June 4th, and you can see this has been a really, really nice trade. I do phase out of my trades partially every day, a small percentage as it moves up my way. So I phased out of a lot here. It moves sideways, not much there. I phased out some more here. I'm only in about 10%. I only have about 10% of my position size left. You can see I did hit 2 profit targets today, and now the price is actually lower than both profit targets I hit. So that's one of the reasons I like to phase out. I like to take something while the market gives me. So I do have about 10% left. If it keeps moving up, I'll continue to stay in the position until I phase out of all of my positions and I'm done. Then I'll be done with the trade. Or if it goes all the way back down here, I will hold it, and if it closes under 250 day, I actually will get out of the trade. But I highly doubt that's going to happen, but you never know. But the main point I'm trying to make here is that if this were a discretionary trade, I would have gotten out of this position a long time ago. But because my intent with the trade was this is a mechanical system, I'm just going to trade it mechanically like a robot. But it has worked out really, really well. All right, so 2 profit targets on Qs. Like I said, the market was much higher earlier in the day. Hey, Dr. Jorgensen here. How you doing? Frederick, are the French going to lose our ladies in soccer? I certainly assume so. Oh, Dr. Jorgensen wants a wager now with Frederick. All right. Sorry, I'm not keen in soccer. Cannot tell you the result of the match. He's a cyclist, Bruce. He's a cyclist. Ask him some Tour de France questions. All right, the SPY. So listen, in case we have any new viewers today, I do want to quickly go over this how I trade the SPY. So one portion of my trading approach is that I do buy the SPY ETF each day at the end of the market, right at the close, and then I sell it first thing in the morning. So you might ask yourself, why would you do this? So it's based upon this back test by Liz Ann Saunders from @Bespoke Invest, and basically here it is. Since 1993, if you would have bought the SPY on the open in the morning, sold it on the close in the afternoon each day, this is every day since 1993, you have actually returned a negative 5.2%. But if you did the opposite and you bought the SPY on the close and then you sold it on the open the very next day, you would have actually returned 568%, meaning more than all performance came in after hours trading. So, it's pretty powerful back test. And it puts things in perspective that literally since 1993, the majority of the gain, actually all of the gain in the SPY came from traders bidding up the price in the aftermarket, bidding it up in the pre-market, and then selling it into the open. So you can see the lines here. The green is the buy in the afternoon, sell in the morning. The red is the buy in the morning, sell in the afternoon. And I mean, what a difference, right? It's very, very clear. And this data goes back all the way back to 1993. So this study was up to 2017. A more recent study up to 2019, the buy in the morning, sell in the afternoon, instead of a minus 5.2%, returned a negative 13.9%. And the buy in the evening or in the afternoon, sell in the morning, instead of returning 568, actually returned 634.2%. That was up to January 19. Stephen Burns did a more recent study as about 7-8 days ago, where the buy in the afternoon, sell in the morning actually returns 712.63%. So it's very clear, at least from 1993, that the majority of the gains come in after hours. And keep that in mind when you're trading as well. It doesn't have to be the SPY. There is an inherent edge based upon this study that holding overnight is an edge in whatever system you have. It is an edge. And if you're a day trader, day traders like it because they don't have to be in overnight. They can sleep better. But you can see, where is the movement during the day? That is where they have to make their money. So I know there's some day traders that do really well, but in general, if you look at this in the big picture, the real edge is in holding overnight. So that is why I do buy the SPY each day at the end of the market, and then I sell it the first thing in the morning. And so let me show you our trade today, or from yesterday. So I did buy it here yesterday at 290.96, sold it first thing this morning at 291.78. So pretty nice gain overnight, right? And you can see some from previous days. Sometimes you have little losses, sometimes you have little wins, sometimes you have big losses. I mean, in the month of May, using this approach, it was not profitable. But overall, since I've been using it since February 26, it's been very profitable. So I just look at this as a long-term trade where I have to make I have to make a couple clicks every day in order to use this approach. So, yesterday, a couple days ago, we bought at the open. We bought at the close, sold at the open. Actually made a little bit, not much, but a little bit. But the main point I'm trying to make here is, look what happened at the end of the day, right? So got in here, basically got out there yesterday, bought there, sold for a nice profit today, and now we're about even, or maybe just a touch lower. Well, yeah, we're lower than where we bought it. So I will be buying this again, but this has been a staple in my approach. It's I've really enjoyed trading this. Andy, hey, how you doing? Hello to you too. Thank you for coming by. Hey, Mount Doji, how you doing, my friend? Good to see you. Thank you for coming by, as always. All right, so that is our SPY. Was a nice little profit overnight. Verizon's our stinker. Seems like sometimes there's always a stinker. I did buy Verizon. Actually did buy Verizon back on the 19th of June when we had this V2. Here's we made a higher high, we came back down, we made a V2. Here's day one. Day two washes out day one. Day three closes above day one's close, which makes it a V2. So I did enter here, actually missed getting out here at the end of the day. I just got busy with some other trades, otherwise I would have got out. But so it did keep me in, and then if I had gotten out, I would have gotten back in here because we had another V2. We had back-to-back V2s. Day one, day two washes out day one, day three closes above day one. Then it moved up nicely, did move up our way. I did take one profit on that, if I remember correctly. Almost got two, but only one. But again, taking some money and taking some shares off when the market gives them to you, so that if something like this happens today, you have fewer shares on the downside. You made some profit to the upside and you have fewer shares if it comes down on the downside. So this is a big down day today. I obviously will be getting out of this trade. But you got to keep those losses small, right? Generally a small loss to me is anywhere within 1 ATR. So, if you look back at all my trades, and I'll show you a few in a while, but you'll see that my losses are small, but my winners, I let them run and they're large. So anyway, this is unfortunate, but definitely going to have to take this off the table. My stop was well, yesterday it was like a close below basically the 10-day or the 20-day. So today we have the trifecta. We've gone through all of them. So I will definitely be getting out of Verizon today for a loss. And we also were at 47.88, so we're underneath the 50. So all of that put together does not look good. The ATR, we're larger than 1 ATR band. An ATR band is from here to here, or from here to here. And anytime you have movement that's larger than 1 ATR, that means it's an abnormally large day. It's larger than noise. It's larger than to be expected. So unfortunately, we're going to have to take a loss on Verizon, but that's okay. So that's really all we have. Oh, I do have AMD. I did sell a put on AMD, and I'll show you quickly why. I sold it down here to $24. So when you sell a put, as long as it stays above your strike price by expiration, you get to keep all of the premium. So I did like that the $24 mark did kind of coincide with the 10-month moving average on the weekly. Do you see how on the weekly bars the $24 price dovetails with the -1 ATR channel and the 50-week moving average? And you can see in the past that 50-week moving average was respected. So if you look back long term and you see moving averages that are respected, it's more likely that they'll be respected in the future. Not 100%, but again, that is why I keyed off of the $24 price on the weekly. And then on the daily, if we get down to the $24 mark, it will be approximately a 30 RSI at this point. That is the reason we sold it. It's up nicely today. So I think I have about almost 20% protection to 24. But if it does get to 24, I'm okay buying in there for the reasons that I just told you. It lines up on multiple time frames. It's probably a decent place to buy. So other than that, the Qs, the SPY, and Verizon, and AMD, those are the only positions we have. We had a really big reversal day yesterday in the tech. We actually got out pretty uninjured. We were pretty light in the tech field yesterday, so I'm grateful for that. So we do have a little bit of a down day today, nothing major whatsoever, and so we're keeping our powder dry for some good setups. Frederick says, Greg, do you always phase out or something, or sometimes you keep the stock long term according to indicator confirmations? Excuse me. I always phase out, Frederick. I always phase out. I think Marty Schwartz in Market Wizards, I believe it was him that said, I have a rule. I always phase out when the market gives me something. And it just fits with my personality to, when the market gives you something, take something. If you're lucky enough to get something, take a little something. So yes, there's never a time where I do not phase out of a position. It doesn't have to be a lot, maybe 5% here, 5% there, another 5% if it keeps moving up. But it's just my mindset with trading is that if I'm lucky enough to get something from the market, I'm going to take a little something from the market. It makes a big difference too on your commissions, because your commissions expense can add up to about 25% of your total yearly profit. So by taking these little phase outs, I am making certain, every time I hit a phase out, I'm covering many positions. Hey, Steve Burns is here. Good to see you, Steve. Thank you for coming. As always, it's a huge honor to have you here. Steve says, phasing out is called regret minimization for a winning trade. Yeah, I mean, it's 100% true. Regret minimization. It minimizes your regret if it goes against you. I mean, like here on Verizon today, right? I mean, it's pretty simple. We did hit one profit target a couple days ago up here. Does, I have a regret that I'm in the trade, but is my regret minimized because I hit a profit target up here? 100%. So, yeah, good point, Steve. Very good point. So, speaking of Steve Burns, I did want to highlight his Twitter channel. If you don't subscribe to Steve on Twitter, you're doing yourself a big disservice. It's at S Joseph Burns, and he has so much good information on here that he posts daily. I mean, if you were to read every post of his, you couldn't help but come away a better trader. Like, he just posted a video here, how to trade with Bollinger Bands, post by Troy Bombardia. So, if you'd like to learn a little bit more about Bollinger Bands, go ahead and subscribe, to his Twitter channel. And then he also has a great website called New Trader U, newtraderu.com, where he has some really great courses on trading. He has his 3 times a week review of the market and his analysis of the charts from his watch list. I listen to it 3 times a week religiously. I always look forward to it. So do yourself a favor. Go to his website, newtraderu.com. Read his books. He has many, many books on trading. They're just so great. And then subscribe to him on S. Joseph Burns. And he has this little picture down here. Look at this. When you're tempted to chase a trend, put these on. FOMO, right? Fear of missing out. FOMO is a serious thing, everybody. And try not to do it. You have a fear of missing out, so you're buying at higher and higher prices. And sometimes it works out, but in my experience, whenever you get that feeling, and if you've been trading for a while, that feeling where you're like, man, it's running away from me. Everyone's involved but me. That's probably a good indication that you've got some FOMO fever. So put on your FOMO slippers and just try to rise above it all and look at things objectively and don't get caught up into that herd mentality. All right. Okay, before we get to the charts, I did have one saying that caught my eye on Twitter. This is from Tom Canfield at Canny4. Impatience and impulsiveness. All right, so talking about FOMO, impatience and impulsiveness, the silent killers for so many potential great traders. Their roots are deep in our psyche. Searching out the drivers is tough, but at the core, they stem from a sense of inadequacy where the market is your proving ground for validation. So, yeah, I mean, you've heard me say this over and over, but trading is a mental game. Learning the basics, learning the chart patterns, there's some skill to that to be able to identify the patterns and the setups for sure. But that's a small part. That's probably 10%. The real battle is in your head. The real battle is not getting frustrated after a loss. The real battle is not adding more positions as something going up because, you're feeling bulletproof and you're getting greedy. I can't emphasize this enough. It's the psychology of trading. It's, how you handle a losing trade going forward is going to determine if you're going to be profitable or not in the future. If you get a couple bad trades in a row and you're like, screw it, and you throw on a big position, you're going to get hurt. Maybe not that trade, but 2 or 3 or 4 down the line, you're going to get seriously hurt. So keep an even kill. Try to get outside of yourself. Don't let the emotions and the greed catch up with you. Just pick a position size, trade it religiously, trade your plan, and impatience, impulsiveness. The best traders in the world have all gone through this. I've gone through this. I'm sure Steve has gone through this. Every single trader I know, some of the most famous in the world I know they have these issues. I've had some of them tell me these issues. So, you're just human. You're going to have them, but self-mastery is the difference between you staying in this game and becoming a successful trader. And it comes down to impatience and impulsive. So anyway, I know I always harp on this, but I want you guys to be better traders. And I want you to understand that that is the important part, is in your brain. It's not the setups. They're important, but anyway, all right, enough of that. Let's get rid of these here. And let's see if there's anything cooking for us today in the possible setup department. All right. All right. So, Apple. Well, Apple's had a big day today. Kind of a whipsaw day compared to yesterday. Yesterday we were, we closed lower than the previous low. We came back down into the range. Was not expecting this at all, but you can see at the high of the day, we did test the prior highs, like literally to the penny. It is a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 closes above day 1. But I would not be allowed to take this because of a couple reasons. One, it triggered above the channel, so I can't do that. It's too high. And then the trigger day here gapped up more than a quarter ATR. So it is a V2. There's no doubt, but because it triggered too high, it has the gap, and we're right up against that third ATR channel, I would have to pass on this trade. Advanced Micro, we talked about that. I sold a put on that. Amazon. So, we did come up, test this third ATR channel. We're starting to come back in value. I wanted to look for someplace in the value zone. Whenever you have an up move, it's normal to come back into the value zone. We did have a big bar yesterday. We had a bar larger than 1 ATR. We did have a bit of a rally today, but you can see how we're holding the halfway of this bar. Whenever you get a big down bar larger than 1 ATR on high volume, even if you rally the next day, you're generally going to have a tough time getting past 50% of that move. And you can see it's exactly what happened. We're sitting right here, 50% of this move. And you're going to see this will be a common theme today with this attempt to halfway of this bar. So nothing there for me. I want to, at the very least, I'd like to see a washout of the 50 and the 20-day moving average here, and then it close back over with the V1, V2. But nothing on Amazon for me today. Boeing having a nice day, had that huge, big, strong move above the 200-day. I felt like I was chasing it at the end of the day, so I didn't buy it. I was waiting for a pullback. I was waiting for a little bit more of a pullback. I wanted to see if it would test that halfway mark, so I didn't get in. I guess it would have been a good idea, but it's okay. Then yesterday's price action did not look very strong, and then again today we've had a big day up, but surprise, surprise, we get right to the 100-day moving average that coincides with the third ATR channel, and that's right where it ran out of gas. So, these are one of those stocks where I'm just going to have to be patient, wait for it to come back into the value zone or some valid kind of setup that fits my stock entry selection. So right now, just these levels are too high for me. Alibaba did have a down day yesterday, and then and then today we've kind of had the same kind of reversal, same as Apple. It did test this prior high, did test the downward sloping 50 SMA, did test the third ATR channel. So these are all indications that I certainly don't want to get in here, right? Because we just tested the third ATR channel, tested the downward sloping 50, tested that previous high and failed. I mean, it certainly could keep going up. I mean, there's no doubt about it. But, to me, taking this trade here right now is subpar for me. So I just need to be patient and wait for this to come back down, probably down into this range, possibly. but nothing on Alibaba for me today. Caterpillar had that nice strong break above the 200. It was too high for me to buy. I mentioned at the time, I've seen this pattern before. A lot of times it keeps going. It's exactly what happened. But again, it did not fit my parameters. So I'm better off just to be flat, not have any positions, unless I can really feel good that all my parameters were met, or a large majority of my parameters were met. But this did keep moving up. So if anybody has Caterpillar, congratulations. Caterpillar. So I'm sorry, CGC. You know, this one is a little interesting to me, not right this second, but we did have this low with this deep MACD histogram bar readings. We did rally. We did come back. We tested the low almost to the penny with a very shallow depth of MACD. So this is what Dr. Alexander Elder calls a double bottom with a bullish MACD divergence. So, you know, I guess it would have been legitimate to buy here on this day because it tested the bottom, did have the divergence, did trigger a V1, but the V1 wasn't great because this bar is so big and we had such a big reversal bar to get back here. So what I'm looking for, remember we talked about, you know, having a big up bar and looking for buys at the 50%, or having a big down bars and looking for shorts at 50%. So right now, you know, we are kind of in that 50% mode, a little less, but tomorrow, if we came back, closed up into the channel, see the downward sloping green here, if tomorrow we triggered a V2, day 1, day 2, day 3 would close above day 1, that would get us back into the channel, the 1 and the -1 channel, which by itself is good, but it would also prove to us that we've tested halfway of this bar. So tomorrow on Canopy Growth, if I do get a close back up into the channel with a nice V2 with this double bottom and divergence behind us and the test of this halfway of this bar, I probably would go ahead and buy it. You know, it's possible today that this could trigger a V1, but I kind of don't think it's going to. But if it did, I still wouldn't buy it unless we close back up into the channel. But we'll mark it, we'll watch it at the end. Cisco had this double top, rejected the double top, rejected the third ATR, had the big downward move yesterday. Right now we're slightly above 50%, but nothing on Cisco. DDM, this is the double leverage Dow. I did take a position back here on DDM back here on the 6th of June when we had a nice close above the 200-day moving average. This is another profitable long-term back-tested quantified approach of owning the DDM as long as it's above the 200-day and getting out under the 200-day. So I did buy it here, moved up nicely, phased out of all of my positions up here. So I am flat this, but I did want to show you this is another mechanical trade that really did go our way based upon a nice close above the 200. So like I said, I am flat. I phased out of all my positions, so nothing on DDM. Here's Dow Jones. This is the regular, you know, so similar pattern. Walt Disney, you know, did make a high, did make a higher high. Now it made a lower high, washed out that previous low. Really nothing here. Ideally, in going into the future, maybe 4 or 5 days or something like this, if we could wash out this previous low, wash out this 20-day moving average, and then have a V1, V2 in the value zone, that would be an entry that I would take for another run back here. This is a good example of a V2 that we took back on June 3rd. Here's day 1, day 2 washes out day 1, day 3 closes above day 1. The previous day, day 2 went below the channel and then back in the channel, just like I was talking about Canopy Growth. You know, it's under the channel. I want to see it close back in the channel. Day 1, day 2 washes out day 1, day 3 closes above day 1, closes back in the channel, and this was a nice little trade for about a 4-day trade and we got out right here. Then we had a dip. I was waiting for a dip, but I didn't get any signals, and then it took off without me. So anyway, waiting for some kind of price action here in the channel, ideally washing out this previous low and washing out the 20 and then reversing back above. That would be the best way to approach this. Etsy, nothing there. You can see here we have a low, here we have a low. I think we are just a little bit lower than here. I talk about MACD divergences, right? Where the depth of the first low is deep, the depth of the second low is not as deep. Well, this is the opposite. This, instead of a divergence, this is called a convergence. See how we're lower now than this low, but you see how the MACD bars are deeper than this low? So that is not a double bottom with a bullish divergence is bullish potentially, but a double bottom with a convergence is bearish. So I'm not interested in Etsy at this point. Where would I get interested? Well, possibly down in the, let's see where the 30 RSI would be on Etsy. Well, if this happened tomorrow, you'd have about a 3261 RSI at the 200 day. So nothing right now, but if we did get down to, that 50, 56, 57 level down here, this would probably be a good sweet spot to enter a big dip, because you have the third ATR channel, you have the 200-day moving average. Depending when it gets down there, if it gets down there, you may also have a confluence with a 30 RSI. So that would be a good risk to reward ratio in this area right here. So, but nothing on there today. Remember, take a look at this, post it on your wall, write a note for when Etsy, if it gets down to like a 30 RSI and 30 ATR channel and the 200-day, that would be a good, legitimate, deep dip buy on Etsy. Doesn't mean it's going to go up, but it would give you a good risk to reward. So we'll watch that in the future. Ford Motor Company, and we did buy it here and here. It was a 2-day trade. It was a good little trade. We got out because of the Fed announcement, but we did make a higher high. Now we've come back into the value zone. That's good, right? That's what I wanted to see. It's come down nicely. It hasn't come down violently. At one point today, it did trigger a V2 intraday. I can manipulate this bar, and let's take a look. See, at one point, it did trigger. So if you bought this intraday, and it's okay to buy V1s, V2 intradays, but I just prefer to buy them at the end of the day. I get better confirmation. But at one point today, this was a V2. Day 1, day 2, day 3, day 3 triggered day 1's close, but I prefer to do my triggering and entering based upon the close. So if I would have bought that intraday, I would have been underwater on the trade already. So this does not look like it's going to trigger today. If it did, it would be possible that I would buy it, but I don't think it's going to. But who knows? Never know. But if it did trigger, it would be legitimate. Day 1, day 2 washes out day 1. If day 3 closes above day 1's close, you have an entry in the value zone coming off a previous high, move sideways for a couple days, stab down and reverse, but to be determined. So we will watch Ford. Facebook, it's had a couple down days now. Did reject the third ATR channel. Again, I'm looking for the pullback into value. This was positive. We made a new high here. But I need a pullback to value. I need a dip, essentially. And right in between the ATR channels is the best place for me for that dip. Hope for the V2 tomorrow for some weed. That's right, Bruce. That's on Canopy Growth. That's what we're looking for. 5 below, we're getting down here to this 30 RSI range. It's 33.55. If we closed under the 30, and close under the 250 and then close back above, that would be a good entry point for me. Doesn't mean it's going to go up, but it would give me a good risk to reward. So we'll watch 5 tomorrow as well. Gold, it's had this monster big rally, big gap. It's been able to hold that gap. We have had some sell off today, but just too high for me to buy or sell or short. These levels just gets real volatile, so I don't want to do anything with gold today. Google, we attempted to run up to that 200-day, found some sellers up there, and it's been downhill ever since. So at this point, if we could move sideways, get a V1, V2 back up, that might be an interesting trade, but nothing today. Goldman Sachs, still under the 200-day moving average. It did reject it a couple days ago, so nothing today on Goldman Sachs. IBB, well, we made this big, strong up move, but it got sold into. It's coming back down. It did break out of this range. If it can come back down into the value, it's in the value zone now, but if it could come down a little further, settle down, stop going down, showing us that there's, the supply side, the selling side is starting to dry up and could move sideways for a couple days, then get a V1, V2 trigger, that would be a good entry and maybe challenge these high, or try to achieve these highs back here again. But right now, there's a lot of selling. There's big bars. It's not showing like the selling's drying up. We did buy this back here on the 17th of June when we took out this fractal. It was a little high when I bought it, so I only bought a quarter position, stayed in it for a couple days, had a nice couple 2-day trades on this, but then we had the Fed meeting, so I decided to get out. But it ended up as a positive trade. Especially compared to where it is now. So I'm glad that I did get out. That Fed meeting, my decision to get out for the Fed meeting, all in all, was a pretty good one. Intel, well, Intel, the chips have been strong today. We did take out a fractal here. Fractal is a high with 2 lower highs to the left, 2 lower highs to the right. It did toy with the 200-day today. Intraday, it did go above it. I don't think I'm going to buy it here. There's a lot of issues here. It rejected the 200 so far. It rejected the downward sloping 50. You have the third ATR channel right above it. Today it looks like we have a 550 200 cross under, also known as the death cross. This could go either way. I think it's a coin flip. I mean, it is strong today. But just based upon this overhead resistance and these moving averages and third ATR channel, I'm not interested in Intel. Russell continued down today. This one was a losing trade. We basically bought this here. It did gap up the next day. We took about 25 of the position off with the phase out, which I'm glad because we locked in 25% position higher, and then it came down against us, and I think we got out of this yesterday, didn't we? No, the day before. So this was one of the losing trades we've had lately, but we lost 75% on the way down instead of 100% on the way down because we phased out 25% on the way up. So nothing on IWM today. Coca-Cola made a new high. Whenever you make a new high but you're above the channel, the green here and the green line here, that's the 1 and the -1 ATR channel. Again, I want to see this come back down into the value zone. Best to test this low because you probably have some stops here, but if we can test that low but it's still strong enough to reverse back up, I'd be interested in Coca-Cola. Lockheed Martin, we have held this new range up here, which is positive. We actually tested the previous high, which now acts as support. It's a 67 RSI, so it's too high for me. I'm more interested in taking a trade on Lockheed Martin like we did back here on the 29th of May, where we had this nice, we made a higher high. We came back down into the value zone, right? We're looking for that dip. We have a sidewards movement, and then the trigger day, we go below. Here's day 1, day 2. day 2 goes below day 1, washes it out, and reverses, showing us that there were not sellers interested in this area. So we did buy it here. It was a reasonable RSI level. It was within the ATR channels, and you can see it moved. We bought it here, and we phased out right up into about here. So that was an awesome trade. But here the rubber bands just stretched too high. MasterCard. So again, speaking about V1s, V2s, here we make a high. It comes back down into value, into the moving averages. It settles down, moves sideways for a couple days. Then we have a beautiful V2. Day 1, day 2, day 2 washes out day 1, day 3 closes above day 1's close. It's within the value zone. The next day hit 3 profit targets to the upside. Then it moved sideways. The day after that, I hit another profit target. Basically, it was 48-50% that we got out up in this range. And then yesterday we had a big dump and we got out. But because I phased, it was still a profitable trade. So today we've had a bit of an attempted rally, but again, the prior day we had the downward movement. Today we've tested about halfway of that bar. The volume yesterday was heavy. The attempted rally today is light on the volume, so this still seems bearish to me, but we are at a MasterCard at this moment. 3M down a little bit today, nothing there. Merck, big down day today. It's coming into the value zone. That's good, but the bar's too big right now. I need to see that settle down. I need to be convinced that there's less and less supply coming into the market by virtue of it moving sideways and not continuing down. So, possibly a dip buy down into here in the coming days or weeks might be interesting for Merck. Microsoft had a big, strong down day yesterday on volume. Today we went a little higher than halfway, but it has given most of that back. Netflix, same big down bar on heavy volume, attempted rally today. Got a little higher than the halfway, but we're less than halfway now on lighter volume, so that's not a good sign. Nike, nothing on Nike right now. Yeah. Philip Morris, we did buy Philip Morris back here on the 20th of June when we closed back above the 10-day moving average. The next day it went ripping up our way. It was a really nice trade. We got out of about 40% of it here and here. The next day it tested the 50 RSI intraday, closed below, so I did go ahead and just exit my position. But that was a nice 2-day trade. Do you see the theme with the 2-day trades lately? And then today it looks like it's going to close underneath the 10-day moving average, so that's not positive. So nothing on nothing on Philip Morris. PayPal, we're back in the value zone. That's good. So there's a lot of potentials in the coming days and weeks to get a good V1, V2 entry to go back up and try to challenge those highs, but we have to wait for them. The Qs, we talked about that, hit 2 profit targets today. Silver is down today, made a lower high, lower low, but I would not get involved with buying or selling metals right now, either to the long side or the short side. S&P, that was our overnight trade. That was a nice trade, so I will be buying that again today at the end of the market. All right, Square. Well, we had that big plunge under the 200-day yesterday. We attempted a rally today, could not hold it. We're getting back down into the value zone, but like all the rest of the charts, I need to see this start moving sidewards, showing that it has some support, then have one attempted break to the downside, and if it reverses back up, that would be my entry. This is a really good example of a double bottom with a bullish divergence. Here's a low, the rally, we make a lower low. You see how deep the MACD bars are here. That's showing momentum to the downside. And then over here, even though we come lower, the momentum is drying up. So that is, that catches your eye as a potential to this may go back the other way. And so when it did go, we did enter this trade back here on the 4th of June when we created a V2. Here's day one. Day two washes out day one. Day three closes above day one, closes back above the previous range, closes back above the third ATR channel. That was our entry because we had a lot of indicators lining up here. We did buy here and we phased out all the way up to here. So again, if you're wrong, you're going to have small losses. If you're right, you're going to let them run. And that's the key to profitable trading, right? Big wins, small wins, break-even trades, small losses. That's the formula. But if you move one thing around, instead of small losses, you have big losses, it's not going to work. So remember that. SSO is the double. Oh, I'm sorry. SSO is the double leverage S&P. Nothing here today, but I did want to show you, this was a good example of a different trading approach where we did buy here on the 6th of June because two things happened. One, intraday, it got below 30 RSI, but closed back above 30 RSI. It also, intraday, was below the third ATR channel, closed back above the third ATR channel. So that was our buy signal right here. And as you can see, it was a monster trade. We got out, we phased out right up to about here, until I just phased out of shares. I ran out of shares because it went up so much. But doesn't mean that that's always going to go up. But what it means is, I buy down here. I have two signals. The market's told me twice that it doesn't like the price under the third ATR channel. It doesn't like the price under the 30 RSI, and close back above. If I was wrong, I would have been wrong probably this big, just another close back into the 30. So, here is a small type of loss. But if I'm right, I let it run. And that's the key to profitable trading. So nothing on ProShares or on SSO today. AT&T is just moving sideways. This is going to run one way or the other. We just don't know when, and we don't know in what direction. TLT. All right, so this is interesting for me today, and this is a good example. So do you see the high we have here? These are bonds, by the way. Do you see the high we have here? Do you see how high the MACD bars are? Lots of strength. Well, then we sell off, we come back. Now we make another high. But do you see how even though we're higher than here, we don't even have any green? That's called a bearish MACD divergence. So after this happens, that is not the short for me, because usually what's going to happen is you're going to get some sell-off here, but then shorts that shorted up here are going to want to cover on this first dip. People that missed this run want to buy the first dip. That is going to cause that's two groups of buying pressure coming in, and that ran it up. Well, today, see how we've created this V2 to the downside from a lower high? We always talk about higher lows are a good place to buy with the V1, V2. Well, now this is a lower high with the V2 to the downside. So I will be taking a short on TLT today. It will be a half a position because it is in an uptrend. It's above the 200-day, but this is a really good example. And these don't come along a lot, but a top, a sell-off, a higher high, a bearish MACD divergence, an attempted rally, that fails with a lower high, and it is a V2. So, the 50 RSI is down here. That is most likely the profit target. If I'm wrong, it's going to be a close above the halfway mark of the washout bar. This is the washout bar. So right here would be close above this red line. That would be my indication that I was wrong on the trade. So, from here to here would be potential loss. From here to here could be larger. I mean, depends how I phased it out, but it's an asymmetrical trade. There's more downside possibility on my short than there is based upon where I put my stop to the upside. So I will be taking a half position in TLT today. Tesla, nothing on Tesla. UNG, nothing there. Oil, looks like it's getting rejected at the 200-day, so nothing there. The dollar had a big sell-off. That 100-day above is going to be resistance at this point. Visa, nothing there. VIX has been moving up. Verizon, we'll be getting out of Verizon today for sure. Energy, nothing there. Financials did trigger a V2 intraday at one point, but it gave it up. Real estate, big down day today. Utilities, big down day today. It's coming back into the value zone, right? We just need to see that move sideways for a while. And healthcare had a nice run up. I'm just waiting for a pullback and the bars to calm down here and move sideways to look for a V1 or V2 back to the upside. So, all right. With that being said, let me just take a look real quick and see what's going on here. So yeah, it looks like the market has given up most of the gains of the day. That's unfortunate. But, you know, on the bright side, we were very, very light today. So it is a red day, mainly because of Verizon. But, you know, it's a manageable red day, and that's the point. All right, so what do we have? I'm going to go ahead, and I'm just going to get out of the Verizon trade, just get that taken care of so it's out of the way.
Order partially filled.
All right, Verizon is out of the
Order
way
filled.
there.
Order partially filled.
Verizon's out of the way there. So that's done. The Qs, boy, I'm glad we hit those two profit targets. That's all I can say. So we're out of Verizon. SPY. Boy, glad we got that at the open when it really mattered, because now it would have been a losing trade. But I will be buying SPY again today. Verizon we're out of. So let's take... All right, so Canopy Growth. Oh boy, Canopy Growth might get there. But, oh yeah, but it's not closing back up in the channel, so I'm going to let that one go. Ford Motor, no. Five Below, nope. Intel, not above the 200, nope. TLT. So it looks like the only position that I'm going to buy, well, two positions. I'm going to go ahead and buy the SPY, and I'm going to go ahead and do my short, my half position short on the TLT because of that double top bearish divergence and a higher low in a V1. So this is going to be a 1/2 position because it's a counter trend trade.
Order filled. Order filled.
131.98. All right, and then we've got to go ahead and buy the overnight SPY position.
Order partially filled. Order filled.
All right.
Order partially filled.
290.54 on
Order
today's
filled.
new. All right. So that is our new entry point for that. So TLT. Oops.
Order cancelled.
All right, so that looks like it's the market. So we did enter a short here on the TLT because of that lower high V2 with the double top bearish divergence behind us. Initially, we'll be targeting the 50 RSI. And then SPY we got in also. So that's it. We're pretty light. We got rid of Verizon. We did take a loss on Verizon, unfortunately. But yeah, we are quite light. So again, the Qs, this overnight SPY we bought there, and short TLT. So we are extremely, extremely light, but the market's telling us that we should be. So, all right. So listen, if anyone has any questions, please type them into the chat. I'm happy to answer them. If you're not clear on something that we talked about earlier, I'll try to explain it a little better. Also, if there's a particular stock that you would like me to look at, or you have some questions, or you're having some issues or frustrations with trading, just let me know what they are, and hopefully I can address them, and hopefully it will be helpful. But before we get to the answer part, I did want to just mention that I do offer private one-on-one coaching and mentoring lessons in the evening time via Skype. I really love to teach. I've had good success with my clients. You know, if it's of interest, my email is in the description of this video, and also you could also send me a message on Twitter as well. But it generally just starts with the free phone call just to get to know each other a little bit better. You know, I just want to visit with you for a little while and get an understand of, you know, how long you've been trading, how you're trading, what challenges you're having, and then I can put together, you know, a lesson plan that will hopefully teach you some good principles about trading, and, you know, also figure in your personality, when you like to trade, what your financial situation is. So I really think it will be helpful. You know, during this live stream, I'm the one speaking all the time, but, you know, in the lessons, you know, of course I do speak and I do teach, but after that, I really turn the tables, because then I'm asking you the questions. I'm having you explain and teach it back to me, because that way I know that you'll really know it. So if that's of interest, please reach out to me. And then also, if you're finding these live streams helpful, if you're starting to learn some good trading principles, hopefully these are rubbing off on you. But if you enjoy the channel, if you enjoy the live streams, please do me a favor, hit that thumbs up button. It does help with Google to help build the channel, and, you know, help me build the channel, help me get this out there. There's a lot of traders that have a lot of problems with trading. It negatively affects their life, and, you know, I want to reach those people. I want to teach them some good trading principles, and I think if they watch this channel, it will help them. So, you know, help me with that. Hit the thumbs up button, share it on your social media, tell friends about it, and you know, let's help build this channel together and help some people. So, all right, enough of that. Okay, let's look. So Dr. Jorgensen says 5 below, looking for a convergence. So let's look at 5 below. Yeah, a convergence, because you're right, Bruce, good eye. We are making really deep downward moves on MACD, even more than this previous bar here. So, but I am interested in 5 below. If we go below the 30 and close back above the 30, especially if we close below the 250 and close back above the 250, that is what I'd like to see, because I always like to see more than one indicator trigger at the same time. It's always better. Okay. Mount Doji, we have the same thoughts on Intel. Now I can't remember what we were talking about Mount Doji as far as Intel. Maybe you could remind me. I can't remember in what context we were talking about that. I guess probably the the rejection of the 200, the rejection of the 50, and having the third ATR channel up there. That's probably what you mean. Andy says, I'm sorry, did you say BABA would need to close above the 200? Came very close to a V2. MACD is good. Let's look at BABA. Initially on Alibaba, I was interested in buying BABA above the 200-day, but then I knew in a couple days we had the Fed meeting, if you remember, Andy, and so it kept me out of this trade. I was considering buying above the 200, higher low. Here's a low that's higher than the previous and a close above. So, that was good, but I knew in a couple days we were going to have the Fed meeting. I was going to have to get right back out. So that's why I passed on the trade. This is a V2 today because here's day one, day two washes out day one, day three does close above day one. So it is a V2, but it's too high for me. I like to have these V2s, the best ones come within the channel. Remember, in the middle of the channel is the mean. The easiest movement comes from the middle of the channel to the third ATR channel, from the middle of the channel to the negative third ATR channel. So that's your least path of resistance of a move. Once you start getting up into these third ATR channels, it starts running out of gas. Not all the time, but a lot of times. So that's why I prefer to take my trades here, because it gives me an easier path. Here I'm buying, if I took this V2 here, I'd be buying right where generally I would be targeting as my profit. So it's too high. In addition to that, the V2 triggered with this huge gap, and I don't like gaps because gaps tend to get filled. With the gap, the market has not tested any of these prices, so that's why a lot of in the real market, that's why a lot of times prices come back and they want to test those levels. That's why I don't really like to get involved with big gap situations. Yeah, I mean, Alibaba, it's just, yes, I mean, it looks pretty strong. It's above the 200, but, the RSI is only 57. But I just think there's a lot of headline risk with Alibaba with the China deal. And again, the downward sloping 50 moving average that rejected today, the third ATR channel to the upside that rejected today, it tried to take out the previous high, close underneath. So, I think the prudent way to look at Alibaba would try to buy a dip or a V1 right back in this range or a test of the 200. You may not get it, but I think that's the proper psychological approach, is to say, it feels FOMO-ish to me right here. Dr. Jorgen says, you are not going to have any trades today. Oops. Well, I did have one, Bruce. I did have one. I did trade the TLT, but very, very light right here. And that's fine. I like being light. Because when you're light or no positions, you're very unemotional. And I'm waiting for some pullbacks, to re-enter with some size. So, all right. All right. Does anyone else have any questions for me? Any comments? Any issues you're having with trading that maybe I can help you with? Please let me know. So yeah, the Dow closed down, the NASDAQ was up slightly, and the S&P closed down. So kind of a big reversal day. It looked really good earlier on. Hey, Johnny. Good to see you, my friend. Johnny says, I had a nice trade on HES. I just sold at the close. I bought it a few days back in the value zone, over 8%. Too big of a green day to keep it. All right, well, let's check it out. HES. Whoa. Nice going, Johnny. You've got some sweet trades, man. You've got some sweet trades. Do you remember which day you bought it on? Man, what a great day. I don't blame you at all for getting out today. You know, these big expansion climax bars are generally a decent place to get out of things. And looks like, let's see, did we test the 70 at the high today? Not quite close, but 8% trade, man. Fantastic. Fantastic trade, Johnny. You've had some really wonderful trades. So you bought it on the 20th. So you bought it here. Well, so, you bought it when it broke above this this previous range. It was pretty strong. Technically, though, Johnny, the value zone to me is in between the 1 and the -1 ATR channels. Here's the third ATR channel and the -3rd ATR channel. Within these channels, I don't consider that the value zone. I consider the 1 and the -1 ATR. Maybe you consider this the value zone. I'm not sure, but just to be clear, just so we're talking about the same subject. But in the value zone for me would be the 1 and the -1 ATR. But regardless, fantastic position. Nice trade. Proud of you, Johnny. Wayne K. Hey, Wayne, how you doing? I think that's Wayne's first time. Are you using the yearly chart? I do have the yearly chart. I can look at any particular stock on the yearly chart. I generally look at the daily and the weekly and the monthly. The yearly is maybe a little bit too big picture for me. Why do you ask, Wayne? Is there something that you have a question about? Do you use the yearly chart yourself? Just for me, it's a little too big picture. But, you can trade on any time frame you want. Just obviously the yearly chart takes a long time. Takes a year to form one bar. But it doesn't mean that it's not a good approach. There's a million different approaches, everybody, to trading. Some people like short term, some people like longer term. The key to trading is finding a methodology and a time frame that fits your personality, because we all have different personalities. Oh, Wayne said, sorry, I meant the daily. Oh, yeah. Most of the trades that I take, Wayne, are based upon the daily. I like to look, when I buy something on the daily, I do like to look at the weekly. I do like to look at one time frame higher just to get an idea. It's always good to get confirmation in two time frames. But yes, I trade mainly on the daily, although I do look at the weekly as well. I use the weekly to filter the noise. Yeah, absolutely right. I studied one-on-one with Dr. Alexander Elder, and he really taught me about, looking at two time frames. Trading on the daily, and then looking at the weekly to see if that looks good too. Wayne, when you say you use the weekly to filter the noise, does that mean you trade on the weekly, or you just get an idea from the weekly on your daily trades? Just so I make sure I understand your question correctly. But you're right. The longer the time, you're right, Wayne. The longer the time frame you get, the more you do filter noise, for sure. Johnny says, not all roses here. I did hit a few stop losses this week. Okay, well, that's okay, Johnny. I was beginning to think you were not human. So that's fine. That's just part of trading, right? Hitting stop losses is just part of trading. But you should be commended, Johnny, that you got out when you hit your stop losses. If I have a big week or big few weeks, people, when I hit, a lot of profit targets, people say, hey, good trade. Yeah, it is good and fine to be congratulated. But honestly, where you really should honestly be congratulated is when you get out, when you hit your stop losses. If you know people that trade, or you have friends that trade, try to support them and reinforce good behavior by congratulating them when they do hit their stop losses, because that's really the important part. That is where they should be applauded, is when they got out when it didn't feel good, right? Frederick says, what do you think of the Bitcoin rally? Oh boy. I'll tell you what. I don't know what to think of the Bitcoin rally. I guess I understand Bitcoin as well as like most general people. I'm no expert in it. I have not been involved in Bitcoin to the upside or the downside. I do have a friend that bought, I don't know, $10,000 or $15,000 back when it was like 4 cents or 5 cents or 6 cents. And he made millions of dollars. He asked me what to do with it up here. And I said, for God's sake, at least sell half. You never know what's going to happen. If it goes back down to zero, you'll never forgive yourself. But I honestly don't know if he sold. I don't think he did. And then when it got down here, I thought, man, it's horrible. But I'm glad for him that we've had this rally. From a technical perspective, down here when it was moving sidewards, obviously in hindsight was the place to buy. But because, small bars, consolidations do tend to lead to big moves. We just don't know which way and when. But if it were me, would I be buying here right now in this literally vertical move up? No, I wouldn't. We're very overbought. It doesn't mean it can go up any higher. Who knows? Maybe it will go back to 20,000. I have no idea, but just, you're asking me my opinion on here from a trading perspective. I certainly wouldn't be buying on these big climax bars. Johnny was just talking about taking his 8% on HES. And I just said, that looks like a big climax bar. I always think it's a good idea to take some profits on big climax bars. So this is a big monster climax bar here today. I wouldn't be buying that. I certainly would not be buying. If I had some, I would be phasing out like any other position. But I don't know what to say about Bitcoin. It's going up like crazy, but all I can say is please be careful with Bitcoin. It's volatile to the upside. It can be volatile to the downside. So just be careful and treat it like any other trade. Determine where you're going to get out, position size correctly, determine where you're going to phase out on the upside, determine where you're going to get out on the downside. Okay, Wayne says I get the idea. All right. Any other questions? Any other concerns you have or need some clarification on anything? Just let me know. Otherwise, I'm going to get my hiking boots on and I'm going to go hike up into the mountains like I do every day. And usually go hike and then I think about my trading. Was there something I could have done better today? Did I make a mistake? Is there something I need to improve on? It's always a good idea to reflect after the trading day on what you did right, what you did wrong, and how you can improve. This is a constant game of improvement. Frederick says, okay, thanks to share your point of view, Greg. You're welcome, Frederick. Wayne says, I got in late. Is your SPY position a long? Yes. So, Wayne, every day I buy the SPY at the end of the day. And then I sell it first thing in the morning. And let me pull these back up here. I'll show you real quickly why. So yeah, I buy the SPY every day at the close of the market, and I sell it first thing in the morning. And it's based upon this study, just real quick, from 1993. If you would have bought the SPY each day on the open and then sold it on the close each day, you would actually return negative 5.2% since 1993 if you did that every day. But if you did the opposite and you bought at the close each day and then sold it at the open the next day, you'd have returned 568%. So meaning that more than all performance in the SPY since 1993 came in after hours trading. So I do buy the SPY each day. I buy a 10% position size each day at the end of the day, and I sell it first thing in the morning, just like, this was our trade from yesterday. So we bought it yesterday at the close, right about here, and this morning sold it for a nice little profit first thing in the morning. And then so it is the end of the day, so I did buy it again today, and I will sell it first thing again in the morning. Does that make sense, Wayne? And that's something that we do that I do every single day. And that's just one of my approaches. I have mechanical approaches, I have discretionary approaches, I have my overnight SPY position that I do every day. I sell put options. So, it's important to me to have a variety of trading approaches so that it gives me a better chance that one of them is going to be in phase with the market, but it also helps limit your drawdown, and it just gives you diversity on your approaches. Wayne says, wow, just learned something. Well, if you come to the channel again, you'll hear me give that little dissertation about the SPY every day, but it's a wonderful back-tested approach. I think, if I only had a very limited amount of time to trade, that's probably what I would do every day, is the buy at the close, sell at the open. So anyway. All right. Well, Wayne K., thanks for coming by. It's nice to see you. I think this is the first time you visit or at least chatted. So thank you for coming by. Frederick, my friend, thank you from France. Appreciate you coming by as always. Johnny, good to see you, my friend. Thanks for sharing your trades with us. You've had some really great trades. Congratulations. Dr. Jorgensen, thank you, my friend. Glad to have you back after your little trip. Andy, good seeing you. Mount Doji, good to see you as always, my friend. Steve Burns, thank you for coming today. It's always an honor. It's it's always exciting for me, and I'm sure it's exciting for everyone else to have you come visit our group. And Andy, I think I already said goodbye to Andy, but if I didn't, goodbye. So all right. Oh, JT. Hey JT, how you doing? Thanks for coming by. What's your opinion on Teva? Let's take a look. All right. So I can tell you on Teva, if we look back in the recent past here, we did make this lower low, right? And you see the depths of the MACD bars pretty deep, right? That means there's a lot of momentum to the downside. Then we did make a rally. Then we came down and we tested that previous low, JT, right? So here's the low with the MACD readings. We did rally. Now we've come back down lower than the previous low. So theoretically, these MACD bars should be deeper because it's lower than this reading. But guess what? Even though we're lower, we don't even have any red bars. That's called a bullish divergence with the missing right shoulder. It's even more bullish than having just a little red. We have no red even though we're lower. So big picture, this does look, I do like this formation, right? It's running out of momentum to the downside. And then, so, we had all these bars down here that was below this previous low. So this was in a new range, right? And again, we're lower here, but our MACDs are positive, right? That doesn't happen a lot. So that is good. Then 4 days ago on the 21st, we finally closed back up into the range. So this is the previous range. We closed back into the range, which by itself is good, but it's better because we have a bullish MACD divergence. Then we attempted to come back down. We moved back up on a strong day with a strong bar. This looks pretty good. I mean, if I would have, it's a possibility that I would have bought that yesterday if I would have seen it. Now, our first level of resistance coming up here that we're going to have to test is going to be the 50 RSI. So, the 50 RSI tomorrow is going to be about in this range. So, if I was wrong on this trade, I could have bought this today and I could have used the halfway of this big bar, which is the 10 ATR channel, as a close below here would be my stop with a potential profit to here. So the risk to reward does make sense. If I didn't take this trade, what I'd really like to see here is a move up here and then a possible sell-off and then a V1, V2, because the people that bought here, JT, once it gets up into this 50 range, they're probably going to be looking to sell because they've made a good profit from here to here. That's going to cause the stock to move back down a little bit. But if it's then strong enough to get a V1, V2 back to the upside, the people that bought here sold up here, so the whole group of sellers are gone, right? And if you want something to go up, it's better to have a whole group of sellers gone. So, you could have bought it back here. That would have been a decent entry point with the potential up here as your profit. You could have bought here when it closed back above the 10. You still could have bought here because your risk would only be from here to here or from there to there. But if it keeps moving up, then I would be late to the party and I would have to look for a test of the 50 that comes back down and then a V1, V2 to the upside. But that all is a long way of saying this looks fairly bullish to me, JT. Does that help? And then JT, if we look at this at the weekly, this looks fairly good as well because we did have a there was a V1 on the weekly, but we moved down, we moved sidewards, we spiked down in reverse. So that's what I was just talking about with Wayne K is, if you have something that looks good on the daily, also look on the weekly and see if you have some confirmation there as well. Okay, good. Glad. Thanks for coming by today, JT. Appreciate it. So listen, really nice that we had a couple new people in here today, Wayne K and JT. Appreciate that. Hope you guys keep coming back. So anyway, stay safe out there. Make good decisions. And I haven't said this for a while, but go out and do something nice for somebody today. Just hold the door for them. Give them a wave, give them a smile. Maybe you're going to brighten their day. Maybe you're going to help their day. Maybe they're going to go on and do the same thing for someone else. But it's all free. There's enough negativity in this world. So, make it a point just to do one little nice thing for someone today. So, all right. Well, thanks for coming by. Hope to see you again tomorrow during the last hour of the market. And if you have any questions that you didn't think of today, feel free to send me an email. It's in the description of this video, and you can also send me a message on Twitter. So on the way out here, I have to play the U.S. government required legal disclaimer again, but thank you for coming by. Thanks, Johnny, and hopefully see you tomorrow. Have a good day, everybody. Take care. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.